Good afternoon, everyone. It's the 5th of November and we're broadcasting live from a rather overcast and stormy Centurion here in Pretoria. I hope everyone is doing really well and settling in for yet another interesting conversation this afternoon, this time around medical malpractice insurance, and we're going to uncover and unpack that in a lot more detail. First of all, I would just like to thank the SpaceNet Global Group for sponsoring this afternoon's webinar again, obviously with the support of EZMed, a product of the company ProfNet, which I'm sure you all know very well. The webinar has been accredited for One Ethical CEU once again, and thank you very much, Daxa and Wendy, you and your team, for all the effort and time that you put into getting this done for us. Over the past 6 months, we've uncovered and we've had some incredible topics that we discussed on this webinar platform. And if you missed any of those, just please be assured that they are available on about 4 different platforms. I'm just going to copy it over here on my left-hand side and I'm going to paste it in the chat functionality. You can find all the previous webinars on our website, on a podcast platform. There is even a, Dion, are you posting it or am I posting it?
No, you go ahead.
I can just see your name on there. There we go. It's available on Spotify. So copy and paste the links that I literally just shared with you in the chat functionality, and you can go and watch them or listen to them whenever it suits you. Talking about watching things, I literally read just this morning that on this day, back in 2015, the Collins Dictionary actually named the word binge watch as the word of the year. So please feel free to go and binge watch all our webinars at any time. I think a lot of people are actually binge watching what's happening in America at the moment. So yeah, we all need to keep a very close eye on that. But guys, if you just want to talk to us today, please feel free to use the chat functionality or the Q&A functionality, and all 3 of us will try and keep a very close eye on that today. Let me just quickly introduce to you the other attendings joining us on the digital platform this afternoon. We've got 19 disciplines again with us this afternoon, so a warm welcome to each and every one of you. We're approaching about 600 people that registered. There's 150 psychologists, about 100 physiotherapists, there's over 50 occupational therapists, and then around about the 30 mark for biokinetics, registered counselors, medical orthotists and prosthetists, as well as optometrists. And then about 20 dietitians, podiatrists, and a handful of social workers, chiropractors, doctors, psychometrists, healthcare acousticians, and I'm missing one, I think. Oh, there's 40 speech and audiologists. Sorry, I knew I missed out on one. Guys, thank you very much for joining us, and I hope you're all settling in. I can definitely see that the numbers are picking up. So I do think we need to get started, because I can literally feel in my bones this afternoon that the discussion is going to be very interesting, and I need to leave enough time for our 2 guest speakers. Now, as you can see this afternoon, we've been joined by a new guest speaker on our webinar platform, but he might be familiar to you on other platforms, and that is, of course, Dr. Brad Byram. He's a qualified chiropractor. He holds a BCom law degree, certificates in medical law, bioethics, and an LLM in international commercial law, as well as a long list of publications and other qualifications. Now, Brad also holds numerous board positions, and he is the founder and the managing director of the advisory group. Dion, I don't know what you think, but I think we can go. I think Brad's got this today.
Yeah, let's get through us.
Brad, thank you so much for joining us and spending the afternoon with us.
Yeah, Lonnie, it's a pleasure. I feel a little overwhelmed and now quite anxious since you've been
Please don't be. It's just me and Dion. There's not around 600 other people joining us at all.
If you and Dion, I'm careful.
I think everyone joining us here today knows Dion Bish, the director of ProfNet Medical and the SpaceNet Global Group executive for operations, and like myself, also a physiotherapist by training. Thanks again for joining us, sir.
Thank you very much, Lonnie. And how's it, Brad? Really nice to have you with us finally. So many conversations, yeah, and it'll be good to ventilate some of those and stimulate some great discussions. So thanks for joining us.
Pleasure. I look forward to the conversation. I'm going to be led by you and then by questions that come through as we talk about medical indemnity and medical insurance, I suppose.
Perfect. Perfect. No, that's absolutely great. I will be your host again for this afternoon, trying to keep these two gentlemen in line. My name is Lani Ace, and I'm obviously the product manager at the SpaceNet Global Group this afternoon. But Brad, I think I was absolutely serious. Dion and I are leaving now. You've got the stage and the mic, so off you go. No, I'm only joking. I'm only joking. But I do want to start with the basics, if I may. And I think in the healthcare environment, a lot of people know the abbreviation MPI, but it doesn't stand for malpractice insurance, does it?
It depends if it's your male practice or not, right? So we're still practicing. They call it a private practice because it doesn't work in theory. And that's what diagnosis means, right? It's my best guess is. And so we often used to joke about this and say, why do people say you've got a virus? Because virus is code for, I've got no idea what's wrong, but let's see what happens in 2 days. So when you introduce the acronyms, one of the things I've learned is that in every profession and in every specialty and subspecialty, we have our own unique code. So whether we're talking about MPI being medical professional indemnity, and we're talking about medical negligence, or we're talking about medical malpractice, or we're talking about indemnity versus insurance, we're talking about actually the same bucket of things. We're talking about saying, if I want to look at the risk of my practice that someone might take exception to my treatment, and that treatment might result in an adverse outcome. And I use the word adverse outcome, we can come back to it, but an adverse outcome is not the same as a complication. Now we have an adverse outcome in our therapeutic relationship, in the treatment that we're doing, and the person who receives that adverse outcome or their family takes exception and they seek damages against us, or they seek restitution. That's a risk that we know. It's a cited risk. And so when we look at risk, we decide to do 4 things with risk. We take the risk, which means we fund it ourselves. We terminate the risk. We stop doing it. We tolerate the risk, where we say, well, it's okay, it'll be bad, or it won't be bad, or we transfer that risk. In other words, we give it to somebody else to hold. So think about this like your car insurance. There's no rule that says you have to have car insurance, but you buy it in case something happens so that you don't have to pay. And then you can choose how much your premium is based on whether you paid for the bumper or whether you disclose that, and they reward you by a no-claim bonus. So when we look at our practices, it's exactly the same thing. If we want to transfer the risk of potentially having to pay later for somebody's pain and suffering, or for the redo of their medical procedure, or for any consequences, we transfer that risk. And when we transfer that risk, we buy a medical indemnity cover. Make sense?
Yeah, it does. Dion, I see you shaking your head as well. It makes sense.
Yeah. I think one of the questions I have, and a lot of times it's really about the English we're using, but Brad, you said there's, it's from an act that obviously is not pleasing to the recipient, and they're wanting to take restitution or action against you. But is it only negligent acts, or is it also intentional? Are those elements that will qualify or disqualify any sort of payment? Does it have to be something you did by accident?
Well, I think that's worth coming back to. And if we could just park that to say, when will a person take exception, and when do they have a right to claim? I think the piece that I wanted to talk about when we talk about medical insurance or medical practice insurance is sometimes it's called medical negligence insurance. Sometimes it's called medical malpractice insurance. Now, of all the professions, you don't get engineering malpractice insurance or legal malpractice insurance or architectural malpractice insurance. We're the only profession where they call what we do when it goes badly malpractice or bad practice. So I'm a believer that words matter in the context that it's used in counts. So it's professional indemnity for the services that we offer that the market has called malpractice or negligence. But we're not doing it only for negligence, because not all outcomes are because we were negligent. So when we're practicing, we know that there's a large percentage of uncertainty because we're dealing with people. And I don't know about all of you, but for all of the people who are listening in, I guarantee you all look different, sound different, feel different, think different, move different. But we have one anatomical reference guide, and it says normal anatomy looks like this, and normal physiology looks like this, and the normal cognitive behavioral approach to a depressive episode should look like that. And those are the realities in the broad strokes. But actually, we all respond differently. So we know that for any treatment we do, any therapeutic journey, it'll deviate. There'll be 3 out of 10 that are less responsive, 3 out of 10 that are hyper responsive, and 4 out of 10 that'll fit the therapeutic zone, which means 60%, the majority of people will fall outside of the normal therapeutic zone. We also know that there are complications that happen. Now, a complication can happen even if you're diligent, even if you're paying attention, even if you're doing the best that you can do. That's why when we talk about these issues, it's not only the negligent outcome that you're transferring risk for. It's the known outcome that results in permanent or temporary harm that's disabled.
So you mentioned that malpractice insurance and medical professional indemnity is almost interchangeable. But there's also this other word, liability, that floats around, whether that is public liability or product liability. Is that interchangeable as well, or is that something completely different and separate?
Well, let's talk about liability in its bucket. So when you enter into a contract with somebody or you engage with them, there's a degree of obligation and a duty that you have. So while we're talking today, my duty is to deliver to you information that's useful, and my obligation is to make sure that it's appropriate. My responsibility is to give it to you in a way that is accountable. Your duty is to listen to it. Your obligation is to act on it, and your responsibility is to take that into your practice and make it work. Likewise, if I come into your practice and you're the physiotherapist and I need care, your responsibility is to deliver care. My responsibility is to pay you for the care. So there's mutual responsibility. Now that means we both have liability. You have liability if your care doesn't meet reasonable standards. And I have liability if I don't pay you or fully disclose to you what my condition was that would help you get good care. That's our therapeutic liability. And that's what we take medical indemnity or medical malpractice or medical negligence insurance for. So equally, there are certain things that happen in our facility that are not in our direct care. So you come in and you slip and fall because it was raining and the tiles are wet, or somebody trips on a loose tile, or while they're walking, and interestingly, this one I've seen happen, you have a plant with spiky leaves and somebody turns around and the leaf spikes them in the eye. That's public liability insurance. You're transferring the risk to an insurance policy that if something happens to a member of the public when they're not in your therapeutic care, the costs that result from that are covered by that insurance policy.
So Brad, here's one example that I just want you to validate if this falls under that. And that is one I've heard very often is patient leaves your practice and they're going out and the motorized gate closes, the sensor's not working and the gate closes on their car and it scratches the side of the car. Would that fall under public liability? Yep.
Well, that would possibly fall under your practice liability. So if it's your practice, then you would insure for accidents and injury that happens. So you have property and casualty insurance, what they call Pnc Insurance. But if when they walk out, the branch falls down and it hits them, that's your public liability insurance.
And then
that's separate. Yeah.
Yeah. So I guess the similar thing applies then to product liability, isn't it? I mean, how would that tie in? The products that you might issue to your patient.
What if a crutch breaks and the patient falls?
That's your public liability
product.
So if you give them a wobble board, or you sell them some, I'm going to use a brand because I don't know what it's called, stretchy stuff. Let's call it the TheraBand is the brand, but you sell them stretchy stuff that you put in the door, and while they're using the stretchy stuff, it breaks and it slaps them in the face and it causes a discoloration. That now is product liability. And the thing about product liability is it falls under a slightly different act. So your public liability falls under your safety and security and your constitutional rights. Your therapeutic liability falls under your registration with the Health Professions Council or the Allied Health Professions Council. The product liability falls under an act called the Consumer Protection Act. And in the Consumer Protection Act, if I buy a bag of apples and there's something wrong with that bag, like the chicken with the listerosis issue, as an example, or the ham that happened with the contamination, everyone in that journey, from manufacture to packaging to end sales, is accountable to some extent in the consumer protection journey. That's product liability. So often we see this, and I was a risk manager in a specialty orthopedic hospital for a while. And we had product liability because we would buy crutches for people post-surgery. So post-surgery, we would issue them with a set of crutches. But, you know, in procurement, sometimes what happens is I want the best ones, the hospital wants the cheaper ones, and then we kind of miss in the middle, and we penny wise and pound foolish, and the person leans on the crutch and the staple on the crutch breaks and they fall down. That's product liability insurance. And so you tend to carry that when you're using products that, like pacemakers or crutches or braces or boots, to use some examples. And so they're three different buckets of insurance depending on what you're doing in your practice.
Now, Brad, I think you're talking about the Consumer Protection Act. I think it's quite crucial that practitioners that are supplying equipment are aware of that. I think prior to the Consumer Protection Act, which has been quite some years, I think it's probably been close to a decade now that that's been out. But prior to that, I think often a response would be that your crutch broke. Well, you definitely need to speak to the supplier or the manufacturer because that's not acceptable. But I think the Consumer Protection Act certainly brought in common sense in that, because I, as a healthcare practitioner, am in fact procuring that crutch. And when I hand it on, the member of the public is actually relying on my professional skills and understanding of and ensuring that I give them the right product that is appropriate for them. And so they depend on that opinion. And if I have a bad opinion on that, and I do, as you say, provide a poor quality equipment or product, I'm liable for that as well. So I think it's important that those that are providing these items have the product liability in their policy wording as well, not so.
Yeah, and so I'm reflecting on what you're saying, Dion. I'm new to clinical practice. I started in 1996, so I'm still figuring it out.
Right, you still
and
practice.
The things that we did it's practice because you never get it right.
Yeah.
So things that we did in the 90s are not things that we can do now. From if we're selling a supplement to, when people say to me, do I sell supplements? I say, no, it's much better. You go buy them from Clicks or Discam or a distribution site. Why? Because then I don't have product liability issues. I don't have temperature control issues, supply chain issues. What happens if there were, and I'm not saying they ever are, but what happens if there were tiny little pieces of glass in one of the bottles or capsules? Or what happens if there was some contaminant like we had some years back? So one needs to be very aware in practices nowadays that the laws that are outside of our therapeutic training, POPI Act on how we manage confidential information, the Consumer Protection Act on how we manage devices and medical devices and goods, RICA, how we do our interception of communication, and the Electronic Transmission and Communications Act, those all affect us. If you send messages on WhatsApp, or you share information on social media, or you have a cloud-based electronic record system, or you're buying and selling products, and you're then using ICD codes, and you're billing through a third-party provider to get your payments, all of those other sideways acts are part of your practice, and you don't need to know them word for word, but you need to know of them and that they can impact you. And so often in malpractice, when we start talking about that not favorite word of mine, liability in practice, often a big portion of those is around bedside manner. People don't seek damages from you because you've got a wonderful bedside manner. They seek damages from you because you're a terrible communicator.
Yeah. Yeah.
But perhaps, Brad, just before we get to that and unpack that in more detail, just quickly going back to products. I know a lot of the healthcare professionals joining us today make custom products, whether that is an orthotic, a brace, etc., etc. Does that still fall under the Consumer Protection Act? if it's custom made, or where does your liability lie there?
Absolutely. So if you a dentist, a dental technician, or doing any sort of bridge, prosthetic plant, if you're making a brace, an insert, if you're doing anything that results in something that somebody can take away, that's been manufactured, it falls under the Consumer Protection Act.
Okay.
And not only can they argue that you weren't clear and proficient in your skill to make it, that you made it wrong, but if the product was wrong, or if I get a contact dermatitis, or if it fractures or breaks, or if for some reason there was a manufacturing defect in the product composition that you used, they can hold you liable in addition to the manufacturer, because you should have checked it.
Yeah. No. So there's another question that came up, if I can just quickly hit pause here. The question is, if a practitioner who is renting premises, who's responsible for the public and property and casualty liability? The landlord who owns the property, or myself as the tenant?
Yes.
Next question.
All right, let's move on swiftly.
No, it's a good question.
It's a good question.
So, in theory, yeah, thanks for that question. I'm leaving. I'll see you later. The first part of that is the landlord is ultimately the responsible person for the rooms or your practice or the facility that you work in. But the minute a person walks into your rooms, the landlord would say, well, I had no control of the rug you put on the floor or the furniture that you were using inside your practice.
So
you need to make sure with your landlord where their public liability insurance begins and ends, and where their property and casualty insurance begins and ends. They might not have it. They might say, well, enter at your own risk. Often you'll go into a facility and it says, we take no accountability for any injury or death of you or your family or your dog or your cat or your car or anything else that you bring in. And then you actually look at that and, well, firstly, they can't say that, but they do. But secondly, you have to make sure whether they have insurance or not, because if they don't have insurance, there's something in the legal process called a joiner. So I can join the landlord and you together while I seek damages, and the court will decide. So if to the person who asked that question, check with your landlord where their insurances begin and end.
Thanks.
Is there a risk of being double insured? Now, we know, like, for example, in medical schemes, you can't take out two medical scheme policies and get paid twice for an intervention. What is the risk here of double insurance when it comes to public liability, overlap with your own personal policies? You might in your life policy have public liability somewhere, or in your practice, and you've actually got double, or they're not quite sure who to go after now because there's insurance covered by two parties. Is there risk to that?
There's always a risk, and that's why you have a broker. Remember, your broker who's selling you these products is bound under an act called FASE, which is Financial Advice. And when we talk about FASE, it's the Advice and Intermediary Services Act. The intermediary services is doing the work with you, delivering you your policy, getting your claim, and all the post office and administrative stuff. But the advice bit is, am I properly covered? Am I overinsured? Am I duplicating this? And that's their job to tell you that. Okay. So what happens is often you can buy similar overlapping insurance from two different providers. And then they look at it and they say, well, hang on, Lani actually covers 60% of this, and Dion covers 30% of it, and I cover 10. So I'm only paying 10% of your claim, and Dion must pay 30 and Lani must pay 60. Now you've got to fight with each insurer. And some say, well, I'm not paying. Only the first incepted policy sounds. So let's say I buy a policy from Lani, one from Dion, and one from Wendy. And I buy the first one from Lani, the second one from Dion, the third one from Wendy. Now it comes to a claim, I claim from all of you. And they say, no, hang on. You got the first one from Lani, so all the others are void. I'm simply paying you back your premiums. And so often what happens is the insurer simply gives you back your premiums and says, well, you weren't supposed to have this policy, so here's your money back.
Okay. But it adds unnecessary complication to that process. So it's important to know what you cover for, know your policy wordings, and ensure you hold your broker accountable to do the work that they're being paid for.
And for what it's worth, there's a view in common law that says Ignorance is not a defense.
Mm.
You can't say you didn't know. You're supposed to read your policies. You're supposed to read your wording. You're supposed to read your registration requirements and notices and gazettes from your regulator. You can't say I didn't know.
Mm.
And how many people really read all their policies and all the wordings? I think it's a scary amount that doesn't do it. Now,
Yeah, absolutely. I see there's a question here, Lonnie, from Erica. Do you want?
Go for it. I can only see, so yeah, go for it. No, I can see that one.
It says, when contracting with an insurance provider, what pointers can you give to select a provider? It goes on to say, many practitioners use MPS, but there are many more affordable options. I think the question here is, what is your personal choice? So in professional indemnity, medical professional indemnity, there are two groups of providers. There are providers who are mutuals. That's a type of corporate structure. And there are providers that are insurers. That's a different type of corporate structure. And each one has different rules that govern what they do. A mutual is a voluntary group, and I'm using these terms very loosely, but it's a group of people who pool their money together for the benefit of themselves and the group, and the decision to support or pay out is a discretionary decision made. And we have many of those. Many of them are old. So a group like MPS or a group like PPS are two mutuals that are well known.
But who decides when they pay?
They do. They have a panel or a committee that looks, and they'll tell you, we're a discretionary-based organization or a discretion-based organization, and we will look at your claim on merit and make a decision whether we're going to support you or not. By and large, I suspect that they're really good at what they do. They wouldn't be around for, in both cases, 100+ years, unless they were doing respectful business. Okay? And I don't work for or represent either, so I can't make a comment on it. The other side of that is you have insurers. And insurers in this country, in South Africa, are governed by what was the Short-Term Insurance Act, which is now called the Insurance Act, and other acts that attach to that, like the one that I spoke to you about called the FASE Act, the Financial Advisory and Intermediary Services Act, got a regulator called the Financial Sector FSCA, Financial Sector Conduct Authority, and a Reserve Bank component called the Prudential Authority that makes sure the insurer has enough money. They're a heavily governed organization or organizations. They are accountable not only in law, but in statute, and they have groups like the Ombudsman that if you don't like a ruling, you can apply for somebody to intervene against those rulings. Now, in those cases, you can either buy your insurance directly from the insurer, or you can buy it via a broker. You can choose. Now, if you're buying insurance from a broker, you're paying the broker's advice fee, which is usually 20%, usually, of your premium is paid to your broker, and sometimes more, depending on what other services they do. The mutuals don't generally charge a broking fee because they don't work in the same way that an insurer works. So, Erica, to answer your question directly, you have to see what works best for you. And you need to get the right advice and to say, based on your risk profile, based on your desire for a regulated environment or a discretionary environment, based on price, premium, service, history, you'll make the decision that's best for you. And this has become a very, very, very competitive market. When I was first in practice in the mid-90s, I was working with groups like the Truth and Reconciliation Committee and a couple of others. And it was at that stage that the Road Accident Fund was just starting to see claims against its fund from plaintiff attorneys. And at that stage, when I looked into this, there was by and large a very subtle but not well matured indemnity insurance market in the country. Between 1997 and 2007, that materially changed. And between 2007 and 2017, when I started to design indemnity products for South African practitioners, it changed radically. And during that time, I'd been working in medical indemnity globally, and that's already quite a lot more mature. So our market has shifted in the 23 years I've been in practice unrecognizably.
Sure. Dion, you were going to ask something.
I've got a question on the mutuals. I think that's very important because as Erica pointed out in her question, I think there's often confusion between an insurer and a mutual and what their obligations and roles are. But a basic question, I can go to an insurer and say, show me my policy. And in that policy, it says, if this, then that, I pay an excess of this and the insurer pays the remainder, right? So that's all quite clear in a policy. What can I get from a mutual to actually give me that same comfort?
Mutuals, and it depends which mutual you're talking about, but they will have a membership charter. Okay. And I'm using that phrase loosely because they may call it other things. It's conditions of being part of the mutual. They will say, welcome, here's the rules in which the mutual is governed by. And these are, and they'll step it out. This is what your benefits are. This is how, if we decide to make a disbursement and pay you back some of the premiums because we haven't actually used them, they don't call it a premium. So you're not let me phrase this in the affirmative. When you buy insurance, you're a policy holder and you pay premiums. When you buy indemnity, and that's an indemnity, but it's an insurance product. When you join a mutual for indemnity, you're a member and you pay a subscription. So you heard me say earlier that words matter and context counts. So you might pay the same amount of money, but to an insurer, you become a policy holder and you have legal rights attached to that, which are enforceable in the country against that insurer under the Insurance Act. The other side is you are, and so you pay your premium and you're a policy holder. The other side is you pay your subscription, you become a member, and you're governed then by the rules of that mutual. Now, by and large, mutuals, if they were anti-competitive or inappropriate or poorly run, wouldn't be around. So there are two streams of preference for types of indemnity.
Okay.
When you look at these,
I'm not quite a contract as such with a mutual, am I? Where I might have a contract in place as such with an insurer.
You don't have your policy is binding, and it is a contract in many ways with the insurer. Your membership is binding with your mutual in much the same way. Just the rules and the nature of how it's expressed are different. In both ways, there's obligations. The difference, and I think it's a fundamental difference, and I stand corrected, and if I am saying something appropriate, I welcome somebody to correct me. The difference is an insurer's got obligation that's not discretionary, whereas a mutual has obligations that are discretionary in terms of engaging in a matter and in terms of settling, defending, or representing that matter.
Okay.
Okay, all right. So earlier we were talking about policy and the wording of different policies and the fact that people don't read it. And I know it's difficult to summarize this, but when you read your policy wording, what are the things that you need to look out for? I mean, I'm immediately thinking of what is excluded versus is there perhaps a limit on your policy? Perhaps you can just elaborate on that a bit for us, Brad.
Yeah, wow. I'm glad we're taking the easy questions early. We'll get on to the hard ones later, right, Lon? I think when you get a policy, it's quite overwhelming because it's a little bit like when I first learned diagnostics. I had a diagnostics lecturer who came in on day one and he said, right, we're going to learn anatomy, physiology, integrated thinking. We're going to find ways to create a diagnostic impression. You're going to reach a diagnostic opinion. You're going to develop your treatment intervention and your prognosis, and then you have to translate that into English so that the person understands you. And you'll know that the National Health Act, where in Section 6, where it talks about informed consent, it says it's not enough to give consent. It has to be intelligent, intelligible, and in a manner that the person who you're speaking to understands. So it used to be in insurance that policy wording was unintelligible. And then 4 years ago, roughly, they brought in two things. One was called TCF. It's a principle in insurance called treating customers fairly. And it's rules around the fact that you have to be able to interpret what's there. And this comes to, Lonnie, to answer your question. And the other piece is something called PPR, which is the Policyholder Protection Rules. So if you had a policy wording pre-1997, 2017, pre-2017, post-2017, you'll notice that it's much easier to understand what you're covered for now than you were then. And if you hold up the two policies, I still look at policies from 2017. I think, was I really covered for that? Now it's a lot clearer. So what's happened is, because of this unintelligibility in the market, the regulators have come back and said things have to be clear. So the policy will tell you, this is a policy that covers the following acts. And the first thing that it'll say is it's covering you for acts that you are licensed to do within your registration.
Your scope of practice.
So then you look at that and you say, yeah. So then what you have to do is you've got to go back to your registration and say, is my practice consistent with what I'm allowed to do?
Yeah.
Because your policy then has a series of endorsements that they call positive endorsements and negative endorsements. In other words, here are benefits for you and here are exclusions for you. And one of the first exclusions is it'll say, this policy will not defend you for acts outside of what you're registered to do, or acts that fall outside your scope of practice. So the first thing you need to do when you read a policy is to say, is this policy addressed to me? Does it have my name on it? Does it relate to me in my professional capacity as a, in my case, chiropractor? And does it say to me that I'm limited to my scope of practice? Because if it doesn't, you need to ask your broker, well, what does this or doesn't this limit me to? Because it might limit you to only one aspect of your practice. And if I were to give you an example of a curious journey that I'm on at the moment, there is a difference between doing myofascial trigger point therapy, using a needle that you inject saline or lignocaine, to using a fine filament, what do you call it?
Dry needle.
Acupuncture needle?
No, there's different. There's superficial dry needling. So it's a superficial DN or a DDN for deep dry needle, or it's acupuncture. They are three different disciplines, right? Now, you may practice dry needling, but you tell your patient you're doing acupuncture.
It's not the same
Now
thing.
you're not covered because technically you're falling outside of the scope of practice as defined in your insurance policy. So, Lonnie, to answer your question, the first thing you look at is, what am I covered for in terms of its definition, and how does that relate to the practice that I do? Then it will say, for example, where are you covered? You are covered in your rooms, you are covered in SADC, you are covered in anywhere except the USA. Because it'll have some geographic exclusions. Say, I'm not covering you in A, B, or C because it's too expensive.
Yeah.
Then it will say, I'm not covering you for specific behaviors. So in many policies, it will say, if your act is a criminal act, this policy will not pay, because policies generally only cover for action or lawsuits that are civil lawsuits, me versus you. If it's the state versus you, your policy may not pay.
Yep.
Then it may say, you are covered. Sorry, Dion, you were going to ask a question.
I want to ask you a question on that, because people often think their policy will pay if they get a fine from the HPCSA or a clawback from a medical scheme or a penalty or any of those. Can you insure yourself against fines and penalties, Brad?
No, it's the same as the Income Tax Act. You can't deduct an amount from your expenses for a fine that's incurred because you didn't pay your VAT on time. You also can't deduct. Yeah, it's funny that. Because I'm sure everyone's earning enough that they're all registered for VAT. You also can't claim back, and most policies expressly, in other words, written down, exclude the payment of a fine where you were found guilty. What they may do is they may say, we will pay your defense costs up to a certain amount. So you need to know what they will pay and what they won't pay. Lonnie, one of the things that you first have to do is look and say, they will pay this after. There's a very cool clause called the deductible. And the deductible says, I will pay my amount after you've paid this amount first.
Okay.
So you need to look on your policy what your deductible is. Your deductible in a medical scheme language is your copay, And in car insurance, it's you pay the first 10,000 and then I'll pay the rest.
That's like the
same in your
excess.
Your excess. So your
Yes.
excess and your deductible are the same thing.
Okay.
So you've got to make sure, what are your excesses? Because you say, oh, I'm covered for medical defense costs when I go to the HPCSA. And guess what? You're covered after the first 2,500, 5,000, 10,000, 20,000. Then it may say, we will not cover you for certain claims against you. And I'll give you an example. Not to say it's your respective cover, those of you that are listening, but it could be that it says, we will not cover you for acts that are against the public good. What is regarded as an act that's against the public good? Sexual assault. So if you are accused of inappropriately handling a patient, and that could be anything from a suggestive text to something you say to them, to the proximity that you stand, to how you touch them, to the absence of there being a chaperone. There's many policies that won't cover you for those acts because they regard that not as a issue on medical or failure of professional care, but they regard that as being an act of criminal behavior.
Sure.
So you need to make sure that what your policy excludes in terms of behaviors. So they may say, yeah.
No. I'm going to divert back to the previous point, I think, that you were making just about territories. I don't know if we could just talk to, I see that Caroline's been really patient in the Q&A, just about practicing abroad. You mentioned that many policies won't cover if you're practicing in North America. I've seen those exclusions on some policies, and I think it's important that we understand the wording in our policies so that we know which territories it is in fact covered for. We know that Caroline, as a psychologist under the HPCSA regulation, can provide services across borders, international borders, provided she's registered with the statutory bodies in both countries, the country the patient finds himself in and the country she's actually practicing in. But she's saying now if she continues to pay her cover, albeit here in South Africa, I guess it would depend on the policy wording, but would she still be covered, and how does that unfold?
A couple of things. So you've raised a good point here, and I can't see these questions that you're responding to. So guide me when questions come through.
Oh, good. Okay.
So I do see one from Estelle. Can your employer pay your insurance? And we'll talk about that as something separate. So when it comes to traveling and practicing in territories outside of South Africa or outside of SADC, because the South African territories, you've got this free trade agreement through the countries that collaborate, which is SADC. Depending on the policy that you buy may or may not include claims that are made against you in this country for work you do there. So there's a couple of things you have to be aware of. You have to be aware of when you practice as a registered practitioner in a country outside of the borders of this country. Often South African insurance doesn't cover your actions in another jurisdiction. So we call it domestic cover because domestic is South African borders. So you may need to make sure if you practice in other territories, SADC or otherwise, that firstly you register to practice there. And secondly, when you practice there, where will the claim be lodged? Because what I found, I did a fair amount of work with medical tourism. So I fly somewhere else and I do work there, and then I treat someone there, and then I come back. Now, depending on the nationality of the person I treat and the country that I treated, and I'll give you an example. I treat a Belgian person in Kenya, and I'm a South African, just to use a simple example. I'd more than likely treat them in the DRC, but let's call it Kenya. That Belgian person can sue me in Belgium or in Kenya or in South Africa because I'm a South African citizen, so they can sue me here. They can sue me in Kenya where the care was done. They can sue me in Belgium where they're a citizen, or they can take me to the international courts because they're an EU citizen. And each of those has different jurisdictions, and each of those has different fines. So if you practice outside of your domestic jurisdiction, even if you're registered there, you should carry domestic insurance in the country you're practicing in for the patients you treat there.
Mm. There's also often timelines on that where they say you can practice outside of the borders of South Africa for a 3-month period or 6-month period and longer than that. So I think it's just, again, very important that we read through the policy wording and the cover that we afforded and that we assume we have in place to just understand that and understand it carefully. Mm.
Correct. And you should take that up with your broker. Your broker should explain to you where your cover begins and ends, what your limits are, where your risks are, and what you're exposed. That's what you pay them their brokerage fee for.
Exactly.
Should your policy wording include whether there's a limit, a ceiling to what they will pay out?
Your policy your policy always does. It says to you, you will have, and here's two different phrases. You will have a maximum payout of, now the phrase is quite subtle sometimes. It's an each and every claim, or it's an aggregate limit. And they're quite different. An aggregate limit is you can eat, there's 5 apples, and you can eat all the apples until all 5 are gone. That's the aggregate. Each and every means you can eat 5 apples as many times as you want to, and there's an unlimited amount of apples. So the policies are generally annual policies. So they say in the year of this policy, you can have a multiple of claims up to your limit of 5 million, or you will have claims with reinstatements, 1, 2, 3 reinstatements of 5 million each. So it's quite important that you understand whether your policy is giving you an aggregate limit as an individual, or if you have a group policy, it might be an aggregate limit for your group. So you may be 100 people who have a group policy with an aggregate of 50 million. Now 50 million sounds like a lot until 100 people all have a 5 million claim each, because then that's 500 million, and suddenly you're 450 million short.
But
So
what if you're the 101st person claiming and there's no money left in the pot?
As long as you're the first person paid out, you're fine. So it's not who's the first person claiming, it's the first person who gets
Yeah, but
paid.
what if you are the 100th?
My message is more this. When you read your policy, see if it's in each and every claim with reinstatements, because they may say we'll pay 1 claim, but it's only 1 claim per year, or 2 or 3 reinstatements, which means we reset you to 0 and we reset you to 0, or it's an aggregate. It's either or.
Okay. So perhaps, Brad, you can just quickly answer that question. Can your employer pay your insurance? And then I want to poke your brain about some common themes around claims.
So to Estelle's and then to Miles's question, because there's 2 here. Can your insurer pay your insurance? Is the health professional alone with an independent practice registration responsible to pay? Yes. You're actually supposed to pay your own insurance. There's quite a lot of debate around whether a hospital group can pay your insurance on your behalf. And then it becomes a question of who owns the liability, the person who pays or the person who is named. So it's not as clear cut as that. Generally speaking, there's tax implications if the premium is paid by the employer, because then that's part of your salary. So if you're salaried, that's quite different. And if you're in the state, you're covered under the state liability fund. So you don't technically need your own private civil insurance. It doesn't mean you can't be attached in terms of liability in your own name, because you can. But generally speaking, if you're in the state covers state-related claims against the hospital, because the hospital is your employer indirectly, well, directly, and then the state is your employer indirectly. Generally speaking, Estelle, the employer doesn't pay the insurance if you're a practitioner, as an independent practitioner, unless, depending on the structure you've created, you may have a PTY or an incorporated business that you are an employee of. Then they can buy insurance for the company and pay your insurance. But you're still billing in your own right using your own MOA number in order to raise your invoices.
So Brad, Miles also asked an interesting question. What type of policy should you look at if you're working in the state, for example, as a psychologist in the correctional services environment? Does that differ from being in private practice?
Yeah, well, if you're working for the correctional services, you're working for the state. So the correctional services should be taking out your specific indemnity and your specific cover. Same for the university. If you are seeing students as a university employee, it's different. If you're running your own practice and you see, and regardless of who pays you, if you're running your own clinical practice, you have civil liability. And if you've got civil liability, you should consider whether you want to hold the risk or transfer the risk. If you take and tolerate the risk, you don't have to buy indemnity cover. But then if somebody claims against you, you could lose your house, your car, your spouse, your cat, your dog. Versus if you have indemnity, you might lose some of that anyway. It's not a guarantee that because you've taken insurance, you can't be liquidated and lose your assets. I think the message is, if you're working for your own account, here's maybe my most simple summary, because by now you'll notice that I can take something simple and make it complex really fast. If you're working for your own account and you're billing in your own name, you should consider what type of personal medical indemnity you want to purchase.
All right.
Sorry, Ronnie, on that note, there's no requirement in your registration that you have to purchase insurance, because that often comes up and no one's asked that yet. Do I have to buy insurance by virtue of my registration? There's nothing in the Health Professions Act or the Allied Health Professions Act or the National Health Act or the mandate of the Health Professions Council or the Allied Health Professions Council that says a private practitioner or a practitioner in a non-state practice has to purchase indemnity. There's nothing prescribing it. It's discretionary. It's not mandated.
But it is a damn good idea to get it, isn't it?
Very much advisable.
Yeah.
I've worked in territories around the world where some doctors, and when I say doctors, healthcare practitioners, have big signs. When you walk in, it says, I do not carry medical professional indemnity.
Sure.
So why would that be,
the patient knows.
Yeah.
You can't buy a Maserati by coming to see me.
Yeah. Why would that be? Now we need to go into, I want you to go into some exact claims, examples rather, for claims. So perhaps there's some general trends. Do you think claims happen because patients just see dollar signs? They can actually claim from this person because they are covered.
We reviewed a lot of literature over the years. So to give you a sense, I read about 100,000 words a week on medical legal claims. To put that in context, that's about 10 books worth.
Oh, joy.
So, yeah, that's why. No wife, no kids, 3 cats that don't speak to me. I never get
lots of time on your hands.
Now I understand why. But there was quite big studies done where the biggest one was 275,000 medical legal claims across disciplines. And what they found is almost half of the claimants had decided to take action against their practitioner before they even saw them.
Sure.
Because they were in a financially difficult position and people see, if I push Lani hard enough, she'll settle. It's quick win money. So between that and this falls under law of persons, and it falls under personal injury law. So there's a sport almost in suing professionals, and specifically medical professionals, in finding settlements. So almost half of all cases that were brought related to financial opportunism.
My goodness.
Now, some of those related to bedside manner. People just didn't like the practitioners. Some of them related to the fact that they didn't want to pay the bill. Some of them related to people who were indebted. But that's half of the claims of that. Then a big portion of the other claims relate to bedside manner, lack of accessibility, lack of accountability, lack of apology. Only a very thin slice of indemnity claims relate to persistent harm post-care. A very, very thin slice. And those relate to negligence. So the first case in our country that defines negligence as we know it, and it relates to informed consent, and it relates to a concept of assault. If I don't ask you your permission and I don't tell you, and I do something that hurts you, it's technically assault. And so then I can seek restitution from you, either criminally, because I go to the police station and I lay a charge of assault against you, or I go to my attorney and I lay two claims against you at the same time: a breach of contract claim, that you didn't fulfill your duties and your obligations, and a delict claim, which means because of a wrongful, negligent act, I've suffered damage. So that's the test that people use, and I'm using that as the preamble to answer your question, as long as the seems, from the following position. The most common claims: scarring, foreign objects left inside the body, procedures that were not done well, and lack of informed consent. You didn't ask me and you didn't tell me what would happen. And when you didn't ask me and you didn't tell me, you removed the plant to wart and you didn't tell me that there was going to be a deeper incision and I got an infection and it led to. You didn't tell me that I could have the risk of a neuropraxia or a pneumothorax when you put in a fine filament needle. You didn't tell me that the brace would cause a constricture because I didn't do my stretches. Those didn't tell me is the big issue.
So
that is so important. I think we see it if we always encourage practitioners to go and look at their regulatory. The HPCSA, for example, publishes all their findings. Who was found guilty of what act and what was the penalty? It is really good reading, because you scare yourself because you're learning from other people's mistakes, and it really does help you sharpen your pencil and say, hang on, what would I be liable for if I did these things, and what should I sharpen up on? And when reviewing those, whether it's an account issue, what was the bill, what was done, what the outcome, the expectations of outcome, the side effects, all of those, it all really boils down to communication. You spoke about bedside communication earlier. I mean, good communication with the patient, a good rapport right from the start, as well as informed consent on finances, informed consent on clinical interventions. I mean, how far does that go to actually mitigate the risks of being sued?
Probably 99%.
As much as that.
I'll tell you a very brief, as much as that.
Yeah.
Because in many states in the US, they have things called apology laws. Because most matters that I've read, most matters, or none, one of the outcomes from the plaintiff attorney is, I want Brad not to do that again. I don't want him to hurt another person. I don't want him to upset another person. I don't want him to do this damage to another person. So that sense of moral righteousness comes out often. And a subtext to that is, had he told me, had he explained to me, had I understood, it would be a different story. And if you like, I'll share with you and you can circulate to the audience. There was a general surgery declaration made by one of the editors-in-chiefs of one of the general surgery journals that I get. So
we just have to look at the time, please, so you can share your story with us, because this is very interesting, but we have got 2 minutes left.
Okay. His very basic story is ultimately comes down to this. He was running a high volume practice where he said he actually thought he'd change his name to, "Hi, I'm Dr. Brad Byra, sorry I'm late." So he was going through things so often, so fast. He was doing a hernia repair, thought he'd done the inferior epigastric artery clamp, had clamped the femoral nerve. But at the same time, the patient remained intubated overnight, and the nurses misrepresented that there were pulses in both legs. In the morning, when they extubated him, he had severe pain in his leg, and he ended up having an amputation. This guy, when he was in the room with a vascular surgeon, realized that it was his clamp 12 hours earlier that resulted in this avascular necrosis. That was the downside. His upside is 3 lessons. The first is, immediately after the first surgery, he'd gone to the family and he'd explained what he did and what he was going to do. The second time is he went and he explained his error and the consequence. And then he saw the person every day through rehabilitation, and he was contrite and apologetic. Now, that could have ended in a significant lawsuit, and it didn't. So that was lesson 1. Lesson 2 is volume practices will lead to litigation. And lesson 3 is there's a guy called Charles Reason who wrote a risk book called the Swiss cheese model. And he said, every time we do a practice, it's like cheese with little holes in it. And every now and then, all of those holes line up. And there's the perfect line of sight through all of them. And that creates that negative outcome. Slow down, take stock, communicate, and write contemporaneous notes. That's your best journey to limit negligence claims.
Excellent. I think that was a fantastic summary as well. Thank you very much for that. I told you we were going to run out of time, but gents, we have to wrap up. We've had a lot of people that indicated during the registration process for today's webinar that they are very interested to find out more information about our product suite. And Dion, I do realize, or I think we've got some exciting news coming our audience's way, and perhaps you can just share a little bit about what next week's webinar is going to be about.
Excellent. Thanks, Lonnie. Thanks, Bradley, for the inputs and the great advice. Nice summary there at the end. And another word to go and look up and understand is contemporaneous. I always have some of those. Fortunately, I know what that means, but it's always interesting. What is a contemporaneous note? So it's important to understand that because it needs to be done in real time. Yeah, I think for next week, we're very excited. We've done this before and we've vacillated about should we or shouldn't we. But next week, we'd really like to share with the audience and with the industry at large in South Africa, just some of the amazing stuff we've put together. Brad has been involved in assisting us in putting together some good wording, a good approach, and bringing a great product to the market for medical malpractice insurance and a public liability and products liability. So we're going to be doing things a bit differently. We'd love to share what we're doing and let the market know what will be available. So watch the space. It's going to be an industry changer, and we look forward to sharing that with everybody next week. It's not going to be a CPD activity, but it most certainly is going to be quite educational. And even if it's about taking up the product or not, comparing what you do have and holding your brokers accountable to say, hang on a second, this is something that's important for us, and it really does make sense. So we'd love to share that with everyone next week.
Thank you, Dion. And just to secure your spot again for next week's webinar on the 12th of November, please go to the EZMed.solutions website where you can register under the webinar tab, or watch out for the email or the SMS that will be coming your way very soon. Gentlemen, thank you very, very much for your time. Brad, we really appreciate you being a guest speaker on our webinar this afternoon. Apologies for running over by 2 minutes, but it is time to say goodbye. I wish you all a very safe and pleasant week ahead until we see each other next week, probably same time, same place again. And everyone stay safe, take care, and goodbye.
Yes. Thanks, Lonnie. Thanks, Brad.
Thanks, Dion. Thanks, Lonnie.